Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we looked at how traders can place an order to buy a stock above the market or sell a stock below the market using what are known as the stop and stop limit orders. In today's lesson we're going to continue our discussion of how to place stock trades with a look at the three main ways that traders close positions. So let's get started.
Let's go ahead and start this lesson by logging into our Thinkorswim paper trading accounts. If you've not done so already, I encourage you to pause this video and click the demo registration link above the video so you can register for a free Thinkorswim demo trading account and follow along with this lesson as well. Once you've opened a trade, it should show up under the equity section of your account tab. As you can see there, you have the stock symbol, the name of the stock, the quantity, the trade price, whether the price where the trade was opened, the mark, which is the mid price between the bid and the ask, which updates in real time, and the value of the stock, which also updates in real time with the market. The simplest way to close a position is to simply click the blue dot beside the position that you wish to close, which will bring up a drop-down menu where the first option will be to sell the stock. If you select that, the trade tab will automatically populate with an order to sell the equivalent amount of shares, or offset. It will be a buy order if you'd sold to enter there. But in this case, since we've bought 100 shares of Citigroup stock to open a position, we're going to sell 100 shares of Citigroup to close the position. Now the order window always defaults to a limit order, so we're going to want to change that to market, because we simply want to exit out of the position at the current market price. So once you've done that, go ahead and click on confirm and then send in the order window that appears, and you've just offset or closed that position there. If you didn't have an open position in your equities tab, then you can go ahead and do that from and open a position from the trade tab to close there. So let's say, for example, that I want to close out my position in the SPY, the ETF which tracks the price of the S&P 500 index, and I want to close out my 200 shares if the market trades down to 100 from its current price of 102.17. I want to take my loss there. And on the flip side of that, if the market trades up to 110, then I want to automatically be taken out of the market at a profit on this trade. So how I would do that is I would click the blue dot beside the position, just as I did before when closing the position, and I would select close, just as I did when we closed the position, the last position at the market. But this time, however, I'm going to change this to a stop order. And I'm going to change the price here to 100. And then I'm going to change the rules column, because I want this order to remain active until I cancel it, to good till canceled. And then I'm going to click OK there. So now I'm about to set a stop order to sell 200 shares and offset my open position in the SPY if the market trades down to 100. So click confirm and send there, and then send in the order window that appears, and you'll see that order show up in the order book with the status working, where it will remain until the market trades down to 100. If the market trades down to 100, then the order will activate, and it will close out my open position at 100. On the flip side of that, to set the order to close if the market trades up to 110, I would select the blue dot again, and then select close again, and then this time I want to use a limit order since I'm selling above the market to take my profit, and I'm going to change the price there to 110. Again, here I'm going to change the rules to good till cancel because I want the order to remain on the platform until I cancel it. And then I'm going to press confirm and send there, and then send in the order window that appears. And so now you can see in the order book that I have 2 working orders to close the position. If the market trades to 100, it's going to take me out at a loss, and if the market trades to 110, then it's going to take me out at a profit. The one problem with placing both a stop and a limit order to exit a trade is that if one of the orders is hit and closes out your open position, then the other still remains active until you cancel it. In situations such as this, if you are not able to cancel the order which was not activated before the market trades to that price, then you will be left with an open position in the market, as the open trade that this order was placed to offset has already been closed. Luckily, there is an order type called One Cancels Other, or OCO for short, which offers traders a solution to this issue. This will be the topic of our next lesson, so I hope to see you then. As always, if there are any questions or comments, please feel free to leave them in the comment section below, and good luck with your trading.